So I was doing some laundry, guys. You know, it's Sunday right now when I'm filming this. I'm not sure when you're watching it, but you're watching it right now. That's all that matters. So I was folding some clothes, doing some laundry, doing that good old stuff, right, that we all love to do, right? And for some reason, Meet Kevin popped in my head. I don't know why. I don't really watch many of his videos, but for some reason, he popped in my head, and his ETF popped in my head, which is ticker symbol PP. Yes, you heard that right. Ticker symbol PP, which stands for pricing power, if you guys didn't know. So I want to do an update on this ETF and see how it's been doing. I've made one or two videos in the past about, was it two videos? One or two videos either way, and I was pretty critical in those videos about the ETF. So I want to break down how it's been doing, how the chart's looking, and my thoughts. So if you guys find value, of course, hit that like button. Let me know your thoughts in the comments. And full disclosure, I don't own this ETF. I do not plan on buying it. Who knows? Maybe at some point in the future, I do. Never say never. Never say never, but I don't own it right now. Do not plan on buying it in the short term here, and I'm not telling you guys what to do. So keep that in mind. Please don't take any of what I say in this video and go make a decision on, what I'm saying based on, you guys know what I mean, right? This is not freaking financial advice. Let's talk about what's going on here. So his ETF is comprised of Tesla and a bunch of other stocks here. We have a 2-year treasury holding as well. Let me actually put it like this so you guys will make it a bit suspenseful, right? So we'll start off with holding number one, which is Tesla. And you guys know Tesla has gone up pretty much 100% in the past couple of weeks. The stock was at $105 at the low. That was about a month ago. Now we're pushing 200. So Tesla is 25% of the portfolio here. He owns in this ETF about 25,000 shares, 24,688 to be exact, and the market value is about $4.5 million. Actually, more like 4.7. So he's pushing 5 mil in Tesla on the portfolio or in this ETF, which is actively managed, by the way. It's not a passively managed or passive ETF. It's actively managed, so he's buying in and out, making decisions, adding stocks, taking stocks out. And I haven't been tracking it every day to see, what stocks have been coming in and out. But you guys got to realize, I think the expense ratio is like 0.8%. It should be somewhere on here. It's somewhere in that ballpark, and it's actively managed. So Tesla is the biggest holding at 25%, which I've been critical about in my previous videos. For me, guys, that's just too heavy in a company like Tesla, which is pretty risky in my opinion. If we're looking at the stock, it's a pretty risky investment. With Elon Musk, who could do anything on any given day, that adds even more risk to it. To the fact that a lot of growth could already be priced in, which we've kind of seen that, the stock come down as growth is now starting to slow down a little bit as well. They're more tailored to the luxury market. Are they ever going to have, well, they are at some point going to have a cheaper model, but when the heck is that coming out? There's so many questions here with Tesla, and of course the competition from the legacy automakers. They're coming in hot, even though a lot of Tesla bulls, they don't want to think about that, or they don't take them seriously. Either way, those guys are coming in hot. So it's a risk to have it at 25%. If this was my ETF, I'd keep Tesla, around 5%. But that's just me, guys. That's just me. I am a little bit more conservative, to be honest. So let's come down a little bit more. We have the 2-year treasuries, which I'm not sure what those are yielding right now. Probably around 4, maybe a little more than that. But that's about 13%. Okay, not too bad. Then we have Apple under that, which I made a video recently talking about Apple, and I believe they're just kind of overvalued at this point, to be honest. To keep it in, the gist of it is they're just overvalued in my opinion. He has a 12% weighting here in Apple, $2.2 million, 14,200 shares. So I think Apple is the least innovative big tech company. I talked about that yesterday, or, whatever day it was. It depends on when you're watching this video, but I talked about it recently. I think it's the least innovative company, and I think they're very frothy here at $2.5 trillion valuation. Sure, iPhone is a great product. A lot of people will continue buying iPhones, but what's after the iPhone? They're not really innovating every year. The camera gets slightly better. Boo freaking who, right? I mean, we're not photographers for the most part, guys. If you are a photographer, great. You probably care about the minuscule changes every year, but at the end of the day, Apple's not really innovating that much, and I trimmed a little bit. I personally trimmed a little bit a couple days ago, but that's neither here nor there. I mean, that's what I'm doing. I'm not telling you guys, of course, what to do. But Apple, yeah, 12% of the portfolio. Then we have Trade Desk, which is 8%. I'm kind of indifferent on that one. I don't know. I haven't done much research into Trade Desk, to be honest, guys. But then under that, we have AMD, Advanced Micro Devices, which I actually like this holding. I really like this holding, right around 5%. That's where I would probably have it at as well. And there's about $950,000. He owns 11,000 shares of AMD. Then under that, there's NVIDIA, which I also like, even though I think now it's a bit frothy at these levels that it's at. And let me actually bring this down a little bit more so you guys can see NVIDIA is around a 5% weighting. That's where I'd probably keep it as well if I were running this thing. $880 million. And if we come down a little bit more, we have ASML, which don't know much about that one, I'll be honest, guys. Then we have Enphase, which is about 5% of the portfolio. Taiwan Semiconductor. I wonder who influenced him to buy that. Mr. Warren Buffett, probably. And that's the thing. A lot of people probably, I mean, not probably, they do piggyback on these super investors' picks, and I've been very critical about you doing that. Well, I'm not telling you guys what to do, but people doing that in general. You shouldn't, in my opinion, and I don't know if me, Kevin, is buying this just because of Warren Buffett. I'm kind of joking, guys, but who knows? Maybe he is. But if you're out there buying stocks that super investors are buying just because they're buying them, that might not be the best thing to do because you don't know what's going through their head. You don't know what valuation they're looking at to sell at. You don't even know when they actually bought the stock, because when these 13F filings come out, usually, well, not usually, they are, the buys were made in the past quarter, right? So they could have bought it 2 months ago, a month ago, so you don't really know where they bought, where they're going to sell, and we've talked about this before. We're not going to dive into the rabbit hole in this video, but pretty much, guys, the top holdings are Apple, Tesla, and these 2-year treasuries. That makes up about 50% of the portfolio. And of course, the 2-year treasury, safer play. But Apple and Tesla being almost 40% of the portfolio, that is a bit intense to me personally. And that's what I've been saying on these videos, guys. But I don't know. What do you think? I mean, it depends who you're talking to, right? It's all relative. Some people might think this is a great portfolio. It depends. I mean, if you're talking to somebody that's 65 years old, I would never, this would be very risky. But for somebody that's maybe in their teens or 20s, hey, this could end up panning out if these companies crush it. And of course, he's betting heavy on Tesla. That's the main driver of the portfolio. If that thing fails, this whole thing is going to fail. The whole ETF is going to crumble unless, of course, he gets out of it and, buys a different stock. Because, again, it's an actively managed ETF, which, those come with higher expense ratios, but they could also potentially beat the stock market because it being actively managed. You actually just, essentially, you're betting on Meet Kevin. Is this guy going to do well for you, poorly? Time will tell, right? So pricing power, you guys see it right here. This is the actual ETF, how it's done, or how it's performed, rather. The inception date, I believe, was on the 28th. You guys can see it was this day right here. It came live 29th, whatever day it was, and it actually shot up to 27.55 in the aftermarket session of the 29th of November. We shot up to 27.55. Then this thing got clobbered because Tesla got clobbered in December. You guys remember that. It went down pretty much 50%. Tesla, with it being a big position in the portfolio, the ETF got hit as well. Not as bad as Tesla because there's obviously more positions in the ETF, but it went down 26%. Essentially, from the all-time high, 27.55, it went down 40%. But if we're looking at where it was on the inception date, right around $20, $21, it went down, let's see, percentage-wise, roughly 20%. So it got itself in a bear market pretty much within a couple of weeks after inception. And now you guys can see it's recovered, and it's actually slightly above where it was on inception. It's not above the 27.55 high yet, which again was that all-time high, is the all-time high in this ETF. It's not above that yet, but it's heading in the right direction. Let's put it that way. This thing is trending up because, of course, Tesla and the markets have been turning around all of January and now into February as well. So let's see, guys. I memean, we're plowing through that $20 level, 22 as well. That's pretty good. We actually closed above 22. You guys can see resistance throughout the 30th of November to about the 13th of December was right around 22 bucks. That was a big resistance. The fact that we broke out of that, closed above it, that's good for the ETF. Now let's see if we could start trucking along to the mid-20s. I mean, we don't have many resistance points to go after or to look at because, well, this ETF just launched about 2 months ago. So one thing I can say again is it is trending in the right direction. And as long as it holds above 22, looks like the bulls are in charge. And honestly, as long as it holds above 20 bucks. So my laundry now, you guys see the bobblehead up there? You could probably hear it. I don't know if you can hear it, but my laundry is getting, I got to go back to doing laundry, guys. So in other words, I got to go put this in the dryer because it looks like the washer's almost done. This thing's it's going fast as heck. And you guys, the whole floor is shaking right now, and I've talked about this before on the channel. But either way, let me know your thoughts in the comments down below. Make sure to hit that like button, and feel free to subscribe if you want more stock market content. I talk about not just Meet Kevin. I'm not one of these Meet Kevin channels that all they do is make Meet Kevin videos, but we talk mostly about the stock market. We break down a bunch of charts here. We talk fundamentals and what's going on overall. So if you like that type of content, subscribe. Make sure to get your free stocks from Moomoo and Webull, link down below. Check out the Patreon as well if you guys want. And let's end the video. I'll catch you guys in the next one. Peace out.